So that one. Okay. Like having a shadow. Today is a mystery guest lecturer. Try with this one. Much better. Okay, so we get started. Chapter 11, Audit of Receivable. So in the previous sessions, yeah, we have learned how to audit receivable and also with the intangible assets, right? So back to the chapter 11, audit of receivable, basically we focus on the three parts, okay? When you audit receivable, one thing is the receivable balances, another one is the allowance for receivable, and also the irrecoverable debt. Okay, so focus on the assertions like assistance. Okay, so you may send a receivable confirmation and wait for the receivables to reply. That can help you to prove assistance. And other than that, you may also look into collections from this receivable after the year end. Okay, so after the year end, if they really pay you, then you will know that this receivable is actually exists as at year end. Yeah. Valuation and allocation. Yeah, valuation is a very important assertion for the receivable because receivable has to be written off if they are not recoverable. So auditor will have to see, okay, what are the receivables that may not be collectible. So we have to discuss with the management. Yeah, should they be should they write off the receivables? Okay, so there are so many audit procedures that we can do over page number 2 and page number 3, and we have covered the confirmation as well. Yeah, positive confirmation, which means the receivable are requested to reply whether the figures are tally or not. Okay, comes to here, page number 6. Okay, today we'll be looking into page number 6, audit of cash and bank balances. Okay, you will send confirmation to the bank, which is what we so-called direct confirmation. Yeah, direct confirmation. So you will need the bank directly replies to the auditor, okay, regarding the bank account balance. Yeah. So I will just need you to go through usually what auditors will need to confirm in the bank confirmation, like details of all the bank accounts as at year end. Okay, for example, your bank account balance. You have to confirm the bank account balance as at year end with the bank directly. And what are the accounts that the bank having with your entity? And is there any account has been closed during the year? Okay, details of the interest charges and overdraft limit. Yeah, overdraft limit. So auditors will need to know if the client is using some overdraft facility, what is the limit for the overdraft? An asset charge to bank as security. Yeah, this one important is because sometimes the company may have used some assets pledged with the bank as a security for certain loan. So in the notes to financial statements, right, you need to disclose what assets you have been used as the security for a bank loan. Yeah, you have to disclose in the notes to account. So auditor must know what asset has been used as a security. Okay, so basically these are the things that we need to confirm directly with the bank. Okay, over here, right at the bottom, I will put down for you some audit procedures and how to do the bank balance. Okay, how to audit the bank balance. Okay. Audit procedures. First of all, send bank confirmation to the bank. Now, of course, we can't be so brief, so general, just saying send bank confirmation to the bank. It's not enough to score 1 mark requirement. I need to tell why I need to send the bank confirmation because I want to confirm the year-end bank account balances, the asset used as a security for a bank loan, okay, and the number of bank accounts closed during the financial year. Okay, so you just briefly tell what you need to confirm in the bank confirmation. Okay, usually we audit bank account. Your examiner will be giving you a bank reconciliation statement. Yeah, because your audit bank account is very straightforward one. You look into the bank confirmation, you get all the details, and also when you referring to the bank statement, okay, when you refer to the bank statement, you can confirm the bank account balance. Yeah, so that's why it's very straightforward to audit the bank balance. So in exam scenario, they will be telling you that bank reconciliation statement is performed because the bank balance is not the same as the cash flow. Okay, it is not the same. Therefore, okay, therefore, we have to perform the audit procedures based on the bank reconciliation statements. So there are 4 figures here. Okay, we can write 4 procedures based on these 4 figures here. So the first one, this figure must be same as the bank statement as at year end. Okay, so we do some procedures for this figure. Yeah. Obtain a copy of the bank reconciliation statement. Agree the bank balance in the reconciliation statement to the bank statement balance at year end. Okay, that's it. Yeah, you agree the figure, then you are done with 1 mark. Okay, you may also do the same thing for the cash book, right? Agree the cash book balance in the reconciliation statement to the cash balance in the ledger as at year end. Okay. So you just agree the cash book balance to the cash book also can. Yeah. So at least we have done with these two procedures. Now I want to audit uncredited lodgement. So first of all, we try to understand why bank reconciliation we have uncredited lodgement. Money comes in, okay? Money comes in and we have recorded the money comes in into the cash book. But the real money not yet inside the bank statement because of certain delay. So cash book, I have the balance, but bank, I don't have the money. That's why from bank statement, we add uncredited lodgement. So how do I know this figure is real one? Eventually, I will get this balance, but not before year end. We will get this balance after the year end. So I will need to verify the uncredited lodgement to the receipt in the bank statement after the year end. So this is what we are going to do. Okay. Obtain a breakdown of uncredited lodgement. Verify them to the, okay, important part is you must tell post year-end bank statement or pre-year-end bank statement. This is the crucial, okay? Post year-end bank statement for the receipt. Okay, we stop. Yeah, you get a breakdown of the uncredited lodgement. Verify them to the year-end, bank statement after the year-end. So you see the money actually coming in, then you can believe that the uncredited lodgement are real one. The next figure is unpresented check. Okay, unpresented check means I have made the payment from my cash book, but supplier not yet received the money. So the money is still inside my bank statement. It's still inside my bank account. So this money will be cleared after the year end. So I will need to look at the payment in the bank statement after the year end. Yeah, in the bank statement. So review the unpresented checks as at year end, verify them, okay, to the post year end bank statements to confirm the payment. Yeah, you also can say that obtain a breakdown of unpresented check, then verify them to the bank statement after year end. Also can. So long as it brings out the same meaning, then definitely can score mark. So I have basically completed the audit procedures for bank account. Usually examiner will ask for 5 marks requirement. So over here we have 5 points. Yeah. Of course, there are some other procedures as well. Okay. You know, besides this unpresented check will get expired. Like today I issue the check for the payment. Supplier somehow lost the check. And after 6 months, right, the unpresented check will be expired and then forever the check will remain unpresented. Even the supplier go and bank in the check, the bank won't process it. So After 6 months, still remain unclear, forever this will be an unpresented check. That's why auditor have to review all the unpresented checks as at year end, identify those unpresented check which are expired. Okay, they have been expired. Request management to reverse the cash book payment transaction. Ask management to reverse the payment. Yeah, like cancel the transaction. Debit bank and credit payable. Okay, do a reverse for the transactions. Okay, finally, this bank reconciliation statement, you got figures over here. Okay, whenever you got some figures, you can always do recalculation. Okay, so I have a final audit procedures. Recalculate the bank reconciliation statement to ensure arithmetic accuracy. Okay, so get ready with some questions ask you to audit bank reconciliation. It's quite popular, they ask in the exam. Not to worry, so long as you remind yourself how the bank reconciliation statement looks like. And from here, the figures provided over here, you just audit one by one. Next, audit of cash. Okay, basically cash auditor don't audit one. Okay, in terms of substantive procedures, auditor less likely to audit. So what we will have to do usually as an auditor, we will perform the confirmation. Okay, send a confirmation to confirm with the management for the cash balances. Yeah, so this is the procedures that we will be doing. Send a confirmation. Of course, this is to confirm with the management. Okay, with the cashier or management to confirm the year-end cash balance. Okay. Now, of course, this audit evidence that you get, the client can confirm 10 times to you and no problem. Okay, we will use this procedure. Even though this evidence is not reliable, but what else we can do? This is the only things that we can do. Despite the fact that cash balance may be material, you still have to send confirmation. But when cash balance is material, you got to be careful. You have to perform surprise cash count. Okay. One of the reason for surprise cash count is because cash is very high risk one. Cash got high risk. People want to steal cash. So very unlikely your client will have a lot of cash transactions. They will keep all the transactions on the through the bank. Okay, they won't go through the cash basis unless their nature of business requires to deal with cash. Right? Okay, for example, one of the audit clients, in the audit firm that I'm working previously, they are operating as the branches with all Dobby, okay, shop, so the customer can go and exchange, put money inside the machine, convert into coins, and they use the coin to wash their, their clothes, okay. Got dryer, got washing machine, and so on. So every morning, okay, because they are operate 24 hours a day, every morning, the boss already mentioned, okay, before 10 o'clock, before 10 o'clock in the morning, they have to go all the branches to collect the safe. The machines will input the money into a safe, and then they have to replace with an empty safe inside the store. And then they will use a security company to carry the cash from all the branches, bring back to the office. They cannot be late because they're afraid that they will go and take the safe, open it, then afternoon only send in to the office, then some cash might have been stolen. So that's why they limit the time. 10 o'clock in the morning must reach office. And then the one who open the safe cannot be the one who carry the safe back to the office. The carrier just go and carry only. So they have the key. So the one who can open the safe, they don't have the key to go to the branch and open it. So there are a lot of control, because cash transactions can't be avoided, can be avoided lah, but at the moment not so advanced lah, okay, in Malaysia markets. So in the office, when they have performed the cash cow, okay, I actually saw the process, because during the time, if your company is having a lot of cash transactions, auditor will have to test those control rather than audit the cash balance. Cash balance at the year end usually not much one. Okay, so nothing much you can do. So instead of auditing cash, I am thinking about audit the fraud, which is covered under ISA 240. Audit fraud is more important. So you need to test the control. What control management have used in order to make sure cash are not stolen. So I saw in the control is that 4 staff inside one room. The room is covered by mirror. Okay, transparent one. So boss can see from the outside. And once for all the 4 staffs get into the room, they lock the door and no one can come out until they finish the cash count. So nobody can walk in and out. So the cash, because they got a lot of branches, when they open up the safe, they throw all the cash on a big table. So the table is like having a lot of cash, like a mountain. So they go and pick up one by one. 1 ringgit, 1 ringgit, 2 ringgit, 5 ringgit, 10 ringgit, they perform the count. So then they record the money. Afterwards, they all come out from the room and pass the records to a person in charge. So it's very strict. I still remember the time, lunchtime, the boss belanja us for lunch. The boss actually used 1 ringgit to pay for that. They asked the restaurant boss, can I pay you 1 ringgit? So they got a lot of small cash. Small cash. So that's something that they can do. Okay. When you're doing a surprise cash count, cash must be counted together with entities and employees. You record the name of employees and audit personnel, and you have to conduct the cash count simultaneously at all locations. So you can avoid the management use the same cash. After you counted in location A, you travel to location B. The management bring the cash from location A to location B for you to count again. Then they are cheating. Okay, say that they have 10 million, actually they have 1 million only. The audit personnel never left alone, of course. If left alone, later the cash got missing, the auditor have to compensate them. Actual cash balances shall be recorded in a working paper. Entities employee have to sign it. Okay. So these are the audit procedures that we do. So in chapter 9, we run through on the cash and bank system. This is the one that we can do for the cash count. Okay, so in case the exam asks you for deficiency, internal control, you can comment some good controls from here. Okay, basically, instead of auditing cash balance, auditor will prefer to perform test of control. Auditor to perform test of control over the cash cycle if the entity is heavily rely on cash transactions. Because this is not a substantive procedure. This is a test of control. It's a different thing. Okay. So now we try some past year question. Usually in your question number 18, it will appears in this way, asking for substantive procedures. So let's see this. Describe substantive procedures you will perform to obtain sufficient appropriate audit evidence in relation to the above three methods. Okay, so you see 3 marks, 4 marks, and 5 marks. Total 12 marks requirement. Total 12 marks requirement, but I put here 20 marks because there are another requirements that we don't do over here. Usually the other requirements will be relates to the auditor's report and also some theoretical aspect about the auditing standards. So the question is very standardized. Ask you to put down procedures and then what if they don't make the changes? What will happen to the auditor's report? Yeah, auditor's report will have a 5 marks requirement usually. So it's like that. Okay. So now we practice on how to write the substantive procedures. Holton Enterprises Co. manufactures and distribute fashion clothing to retail stores. Year end 31st of March, and you are an audit manager. Supplier statement reconciliations. Okay, the company received monthly statements from the main suppliers, and although these have been retained, none have been reconciled to the payable ledger. The engagement partner has asked Audit Senior to recommend procedures to be performed on the supplier statement. Okay, we cannot simply write one. We have to base on the scenario. So now you audit supplier statement. Okay, what procedures that you will need to perform? Okay, page number 8. Supplier statements. Put your answer in point form and remember the three things. Work, now, objective. Okay, if you don't want to write objective, you can put the work and the now only. So to audit the supplier statements, the very first step is you agree the balance. Okay, if you can agree payable balance in the ledger with the supplier balance, congratulations, you have done most of the audit procedures. Because supplier statement is a third party evidence, is a strong evidence. So Review the closing balance in the supplier statement as at year end. Agree to the payable balances as at year end. Okay. Of course, not all supplier statements are able to agree with the payable balance. Okay. We seldom see accounts so nicely done one. Yeah. Even though your payable balances are correct, doesn't mean that your suppliers are going to be correct. So you just try to agree. However, some you can't agree one, you request management to perform reconciliation on the payable balances if they are not agreed. Okay. So this is the first audit procedures. Okay. Nothing much we can do. Okay. Don't say send supplier confirmations, yeah. Not accepted for the answer. Don't say verify to invoices or whatever, because you're auditing the supplier statement now. Okay. So verify to invoices are you are not using the supplier statement. So this question, you have to assume what if they cannot agree. So you have to obtain a copy of reconciliation statement of payable balances. Okay, if they cannot agree, inside the reconciliation statement, you are going to expect to see two things. One is goods in transit. They can't agree is because of goods in transit. Supplier sent us the goods. Supplier recorded their sales, but our side here, we haven't received the invoice yet. We only received the goods. We haven't received the invoice, therefore we don't record the payable balance. That's why got a difference. Now I will verify the goods in transit to, okay, another key point, to which document? Okay, we'll follow dispatch notes. Don't follow invoice. You see when you receive the goods. So verify the goods in transit to pre-year end or post-year end. If you receive the goods after year end, then you must record the purchase after year end. Supplier also record the sales after year end. So your balances shouldn't be any different one. If let's say it's after year end. The problem is they send you before year end, but they bill you later. So you must verify to the pre-year end dispatch notes from suppliers to confirm goods were received before year end. Okay. So that's one thing, goods in transit. Okay. Another reason is because of cash in transit. I make payment to supplier. From my account, I have reduced the payable balance, but supplier haven't received the money, so got a difference. Okay. So in this case, verify the cash in transit for payment to suppliers, okay, to pre-year-end bank statement or post-year-end bank statement. Okay, definitely is post-year-end bank statements. Because if pre-year-end your bank account already been deducted for the amount, then supplier should have minus the amount. They should have received it. If from my side has been deducted, then their side must have been received. So I can refer the cash in transit for the payment to supplier, look at after year-end bank statement to ensure my reduction of the payables are correct. So the purpose is to confirm the payment, to confirm the cash in transit. Okay. Usually my practice is I will do one extra audit procedures for you as a reference. But this question, I can put 3 only. Okay, of course, I can put one more recalculate the reconciliation statement, but I found that no use lah. Yeah, never mind. 3 answers are enough. This is a tough question. Indeed, this is a tough question because only asking you audit supplier statements. You write cut off, you write valuation, all wrong one. Okay, just focus on the statement. Number 2, okay, part B, bank reconciliation 4 marks requirement. During last year audit, significant cut-off errors were discovered with a number of post-year-end checks being processed prior to the year-end to reduce payable. This is possible one. Like credit bank, debit payables for the payment. But in actual, they haven't made the payment yet. They just assume they are going to make the payment, so they deduct from the cash book and reduce the payable. Then money didn't go out. Money wait until after year end, then only they pay the supplier. So this is cheating because you want to reduce the bank balance, to reduce the payable balance, end up you can make good of the current ratio. You will present a very good current ratio if you do that. Okay, so it's a cheating lah. The finance director has assured the audit engagement partner that this error has not occurred again this year and the bank reconciliation statement has been carefully prepared. Audit engagement partner has asked that the bank reconciliation is comprehensively audited. 4 marks requirement. So basically, for part 2, right, the scenario tells you nothing. Nothing specific in the scenario. They just ask you to audit bank reconciliation. So can you refer to note in chapter 11, page number 6 for answers? Okay, you need 4 answers from there. So long as you put down the answer relevant to bank reconciliation, don't use bank confirmation, yeah? Bank reconciliation got 5 or 6 procedures over there. So you choose which one that you prefer to write. So I'm not going to discuss the answer for part 2. Nothing specific, okay? Very general procedures for auditing the bank reconciliation. Part 3, receivables. Autumn's receivables ledger has increased considerably during the year, and the year-end balance is 2.3 million compared to 1.4 million last year. The finance director has requested that a receivable securitization is not carried out as a number of their customers complained last year about the inconvenience involved. The engagement partner has agreed to this request, task you with identifying the alternative procedures to confirm assistance and valuation of receivable. 5 marks. Now class, this one the scenario got point. First of all, increase in receivable, okay, by almost 2 times. Yeah, increase a lot. And you cannot do confirmation. Your partner also agree already, then you still go and do. You are what? Audit manager, right? You are the audit manager. You have to listen to the partner. And partner say don't do, then don't do. And you have to do this. Assistance and valuation. So you do rights and obligation, cut off or no marks. Okay. So is this tough? Yeah, it's tough. Yeah, because focus on assistance and valuation, and you cannot use confirmation. So what to do? Okay. Receivables. Okay. Remain calm. Receivable, one important procedure is you look at after year-end collection. Okay, because after year-end collection can prove to you assistance, can prove to you valuation as well. Yeah, they pay you this amount means you don't have to go for impairment for the receivable. So we select samples of receivable balances, trace them to the post year-end collections and verify the collections in the post year-end bank statement. Okay. No need to tell the objective, as this is very obvious you are checking for assistance. So besides after year-end collection, what else we can do? Okay, you have a clue over here that receivable has increased a lot. Now don't say check whether they got increase in sales or not. Increase in sales doesn't mean increase in receivable. No connection one. Okay. What is having a connection is you can compare your receivable days to the credit period offered to the customer. So you can calculate the receivable days, because receivable days showing 50 days, for example, your credit period is only 30 days, something is wrong. Customers are not paying on time. Then you can ask the management, hey, you got allowance for receivable or not? Okay, so we perform. You study ratio, this is so-called analytical procedures. Okay. Be more specific is substantive analytical procedures. By comparing the receivable days for year 2015 to the credit period offered by management to credit customers. So, discuss with management for any significant difference. And inquire whether allowance for receivable is needed. Okay. if let's say there was an increase in the receivable days. Okay. Nothing much we can do for assistance one. Okay. Because I wanted to send confirmation to confirm the assistance, but now very hard. So except for the first procedure, the rest of them we are going to write for valuation only. So is there any other things that you can do for the valuation? Imagine that you have this aging report. Okay, auditors will have to see the aging report, because from the aging report you can find out which customers are dragged for very long and they never pay. So I will obtain a copy of the receivable aging as at year end. Okay. Review the long outstanding receivable balances in the aging report. Discuss with management any allowance for receivable is needed. Okay. So that will actually prove the valuation, yeah, allowance for receivable. Now, what else we can do? Okay, receivable increase a lot. Maybe you look at aging, you can't find anything. Because when you look into the aging, you don't find long outstanding receivable. Do you know what is the reason? If you can't find the long outstanding balance, right, probably it's because management manipulated the accounts. So like as a year end, I want to show a very good sales. I want to show high profit. So I credit sales and debit receivable. Okay, fixed sales, yeah, fixed sales. Credit sales, debit receivable. So you can see that as at year end, suddenly the receivable jump very high. Okay, it's jumped very high. So it become 1.4, sorry, from 1.4 million last year to 2.3 as of this year. So you look at aging report, they are all the new receivable balance because manipulated the accounts as a year end. How do you know they are real one or not? Okay, how do you know they are real one? You can look into after year end credit notes. Okay, after year end credit notes. Maybe the management show very good sales before the year end. So they credit sales, debit receivable, then right after the year end, they create a lot of credit notes to cancel those sales. So I want to see the credit notes after year end. Are they related to the sales before year end? If yes, please deduct the sales before the year end, not after the year end. So review the credit notes issued after the year end. Determine whether they are related to the sales before year end. Request management to remove the sales prior to the year end for which credit notes were issued after year end. Okay, ask management to remove those sales. Okay, so another procedure to prove existence, if you cannot send confirmation, never mind, you have some other documents that can prove these sales are actually there. The receivables are actually there. How? Select samples of receivables balances as at year end. Trace the breakdown of receivable balances. You get a breakdown, you know which invoice that they have not yet paid. Okay, so look into the invoice. Okay, to invoices, trace to the dispatch notes and customers purchase orders. So like that, you will know that the receivables are real one. You check through the dispatch notes, customers purchase orders, invoices. All right. Audit for the valuation for receivable. As you know, allowance for receivable will definitely reduce the total receivable balance. So maybe management have created an allowance for receivable. So you need to perform audit procedures on the allowance for receivable. This one is an assumption. Is an assumption. Okay. So obtain an understanding from the management in relation to the assumptions used in determining the allowance for receivable. Assess the reasonableness of those assumptions. So I give you 6 procedures. It is more than enough for 5 points. Okay. Of course, there are some other answers. You audit the allowance for receivable, you can score mark. Okay. For example, like you can mention compare the assumption used with prior year. See whether got different or not. Okay. And also you can inquire to the credit control department. Is there any trend that customers are not paying the debts? And then from there, make sure it is consistent with the assumption used for the allowance for receivable. Yeah, something like that. Okay, a lot of procedures that you can do compared to last year and compared to your impression with the credit control department. Yeah, it's tough, right? Okay. So if you can do all this, then you are a very good auditor. Yeah. But give yourself some energy. Okay. You don't have to write 5/5 to pass one. Three, okay, try with three procedures. So if you can make it three, then try to make it for four, and then try to make it for five. Okay. So slow. Okay, start slow. Yeah. After some time, you will find that these procedures are more or less the same one. The important part is you need to remember why you are doing the step. If I memorize how to do receivable, I memorize all the point I put in, I won't score the 5 marks one because it's not relevant to the case. So this is chapter 11. Okay, before we look into chapter 12, we can try a question in your specimen exam that I asked you to try in the previous class. So over here they mention, okay, question number 6 to number 10 in your specimen exam paper. You can access it through your CPE platform. Yeah. 1st of July, year 5, Palo Telecom operates a number of hotels providing accommodation, leisure facilities, and restaurants. You are an audit supervisor, conduct the audit for this company. The following informations are available. Non-current assets. They incurred significant capital expenditure during the year, updating the facilities. Depreciation charge based on straight line method using full month depreciation in the month of acquisition, none in the month of disposal. The audit team has obtained the following extract for the non-current asset register. Okay, so in order to verify the depreciation charge, audit team has recalculated a sample of the depreciation charges. Audit team has also been asked to carry out detailed testing on the valuation. So, question is, which of the following correctly calculates the depreciation expense? Yeah, examiner wants you to do the point estimate. Yeah, you need to determine a point estimate for the depreciation charge. So, okay, remember to bring in calculator into your exam hall also. Yeah, you may need your calculator. The first one, 18,000, 36 months, right? They bought it in May. So from May until December, how many months? 8 months. Yeah. From May until December, 8 months. Cost is 18,000. Is it really 4,000 for the depreciation? 18,000 times 8 months out of 36 months. Yes, 4,000 is correct. Same thing, mid of May, they bought the asset. 17,000, okay, we have 36 months as well. So I divide it by 36 months. Again, full month depreciation is used. So I base on 8 months to charge the depreciation on 17,000. I'm not getting 5,667. I'm getting 3,778 for the bikes. The other two assets in August, so both are having 5 months, yeah, 5 months, including August, 5 months. 9,750 times 5 over 36 is not correct. 2,167 is not correct. Should be 1,354. And lastly, 11,000 for 5 months out of 36 months. Yeah, 1528 is correct. So total depreciation 4,000 plus 3778 plus 1354 plus 1528 altogether 10,660. But they charge 13,000. They charge too much, right? For the depreciation. So when they charge too much, assets are understated. Therefore, the first option is the answer. Okay. Number 2. Which four of the following audit procedures are appropriate to test the valuation assertion? Okay, don't trust my answer. uh, which four of them are testing valuation? Okay. Review board minutes for evidence of disposal during the year. Verify that these are appropriately reflected in the non-current asset register. Okay. So make sure those assets already sold one is not inside non-current assets. This is to test about existence. The asset no longer exists after they dispose them. So this should be removed from the non-current asset register. Okay. Which I also think that it is somehow relevant to valuation in terms of the amount. Okay, in terms of the amount. But non-current asset register, this amount, the asset should be removed. It is still more towards assistance. So we leave it. Agree a sample of additions included in the non-current asset register to the purchase invoice. When you check it to the purchase invoice, you are checking the valuation, right? So this is correct. Review repairs and maintenance expense account for capital expenditure. This one we done before one. So what does it mean is you check the expenses account, see got asset included inside or not. You are testing for completeness. Is it correct? Completeness. Maybe got assets, they didn't record. So I look at the expenses, I found some assets, and then I'll ask the management to record them. So this is the procedure for completeness. Okay, this is for completeness. If you look at asset cost, check got expenses or not, then you are doing assistance. The other way around. Okay. So this is not my answer. Recalculate the depreciation, yes. Review the physical asset, see got sign of damage or not. This one a bit tricky, but the answer is still correct. This is about valuation. I know when you see the assets, you are doing for assistance. But you see the assets for damages, then you are checking for impairment. Impairment affect the valuation. Okay. You check whether got obsolete, got damages or not. That is for impairment. Now, lastly, ensure disposals are properly accounted for and recalculate the gain or loss on disposal. This is also the answer. Ensure disposal are correctly accounted for means you have removed the assets from the ledger. Then the last one and the first one, are they the same? More or less the same, right? Yes. So now you know better about ACCA paper. You think like this, okay? You are not wrong, but the answers are not correct. Not wrong, but not correct. The best answer is 2345. Sorry, 2345. Correct. 2456. Sorry, 2456. So why the last one is correct? Because ensure disposal are properly accounted for. They are more towards the figure. Okay, I truly believe that recalculate gain or loss on disposal, nothing much to do with the valuation. Okay, yes, you can somehow link this to valuation if you say that more specifically, this gain or loss on disposal, you are not calculating for the accuracy. You calculate this gain or loss on disposal, I add something, you evaluate the gain or loss. From there, you see the valuation correct or not. Now, what does it mean? Okay, let's say I dispose an asset. I show a very good gain. Very good gain means you charge too much depreciation. Imagine I buy one motor vehicle. The first year, I charge 100% depreciation. I write off the whole motor vehicle. Then next year, I sell it for half price. I still got gain on disposal. Make sense? Because my carrying amount becomes zero. If I charge all the depreciation within 1 year, 100%, my carrying amount becomes zero. Next year, I sell 50% at my cost. I still have the gain for the 50,000. My gain will be very high. So gain on disposal very high is telling you you are charging too much depreciation. Gain on disposal, okay, let's say you have a loss on disposal. Loss on disposal is telling you you might have charged too low for the depreciation. So I don't agree with this answer because recalculate the gain or loss only can see accuracy. You should say reevaluate the gain or loss. Then it will be more proper. But anyway, we choose this answer. Okay, ACCA answer, you always choose the best one. There's no confirm lah. Yeah, one or two answers will be like that. Okay, of course, most of the questions are still very accurate. Okay, next we have this food poisoning litigation. Paulo Telecost director received correspondence in November. Okay, got customer suffer food poisoning. Now, which of the following audit procedures would provide auditor the most reliable evidence? Okay, written representation from management, no. From management are internal one. Board minute also from internal one. Compare customer and lawyer. Of course, lawyer give you the most reliable one. This one very certain. Okay, move on. Which two of the following are benefits of carrying out trade receivable confirmation? You get the party source, yes. Cover all assertion. Alright. Okay, it doesn't cover all assertion. I have highlighted this in the notes. It doesn't cover recoverability. Yeah, does not support this assertion. Valuation in terms of recoverability cannot support completeness. So, provide a sufficient appropriate evidence overall balance assertion is not correct. The improved audit efficiency means save audit cost because all customers are required to respond. No such thing. It's very reliable because it's under control of the auditor. Yes. Okay, straightforward. And lastly, okay, let's pull it back. This question is interesting one. The audit team member has asked if additional work is required on the receivable. So this is the table over here. Trade receivable secularization. The audit team has obtained the following result. 4 customer, 1, 2, 3, 4. Balance as per sales ledger. The first one is the same. So for VLO call, what you have to do? No further audit procedures required, right? Okay. You also know it's wrong, isn't it? Because amount tally doesn't mean you don't have to do anything. But the question here, they mention based on result of the secularization. They are not saying you audit receivable now. You just based on the secularization. Then it's correct lah. no audit procedures is required based on secularization. Okay, because the amount tally means done already for secularization. Of course, review after year-end collection still required. Okay, number 2, SIDA core, our balance is 35,000. Customer 125. I have a higher balance because I issue them an invoice. Okay, I issue them an invoice before year end. That's why I got 10,000 extra. Probably the invoice value is 10,000. Right? So, whose mistake is this? Is it my mistake or their mistake? Their mistake, isn't it? I already issued them the invoice before year end. Third party didn't record. They should record, but they didn't record. So that's why they got lesser balance. We are correct. 35,000 is correct. Okay. So you check to pre-year end invoice. This will be more appropriate. SIDA core, pre-year end invoice. Yeah. Okay. Fired, cannot third. How about the third one? Okay. Whose mistake is that? Why got different one? My record is 60,000. Confirmation come back 45,000. Because payment made on 30th December. Okay. Customer pay us on 30th December. Customer pay already. So their balance reduced by 15,000. I haven't received the money. I keep at 60 because of the delay in the collection. Then both of us are correct. No one is wrong. It's just because of cash in transit. So in order to prove the 15,000 cash in transit, I will receive the money before year end or after year end. Sure, after year end. Yeah, good. So Mapper call, agree to the post year end cash book. Then you are done with the work. Post year end got 15,000 come in, then okay, this one can move on. Lastly, both are correct one, 55,000, but you got 20,000 in dispute. Then you ask the management, hey, any outcome from the dispute? So are you going to collect the money? If not, write it off. Okay, so Roria call will be the last option. That's it. Okay, we will see how. Okay, what are we going to do next before chapter 12? Let's go back to the answer that we have done earlier on this Walker's call. Okay, Walker's call. Chapter 5, page 25. Finally, we can try audit risk questions. Okay. Audit risk questions, every exam sure come out. Okay, I would say sure come out. I haven't guided you through how we respond to the risk, but now we can do it. Because you already understand how are you going to perform the audit. Okay. So we write 2 responses, then we take a break. Okay. Now, no need to read the question anymore. If the audit risk answer that you put down is good enough, then you should be able to understand from here already. If you read the answer here also cannot understand, then something wrong with the answer over here. Authors call introduce a general sales bonus system to the salesman. The problem is, salesmen may recognize the sales earlier. That's the problem. They recognize the sales earlier, therefore, sales could have been overstated. You are the auditor. Your role is to confirm, is it the sales are really overstated? The problem over here is the cut off, wrong cut off. Salesmen recognize the sales earlier. Next year's sales I recognize now is a wrong cut off because the sales are not put inside the correct accounting period. So your response is to conduct cut off test. Agree? Okay. But your audit response answer is not exactly the same as substantive audit procedures. I'm telling you, you use substantive audit procedures as your guide how you respond to it, but you don't write exactly the same. Auditor response, you will usually use certain words to enhance it. Okay, usually I will do cut-off test, but now the risk is there. That's why my response, I will react. How I might react? I will extend the cut-off procedure. This is what I'm going to do. Usually I will do cut-off, but now my response is extend cut-off procedure. I do more. Okay. Extend cut-off procedures on sales revenue. Then I start explaining the procedure, how to perform it. By selecting pre and post dispatch notes. You do cut-off test, you have to see the dispatch notes when you send out the goods to the customer. Follow through to invoices and sales ledger to ensure sales are recorded in the correct accounting period. Okay, of course, not just one response. Sales are overstated. Okay, you put one response, you get 1 mark. Yes, it's 1 mark. I'm just giving you some extra answer so you can consider some other procedures. Maybe after year end, right, got a lot of creditors to cancel the sales. So you might want to review the post year end credit notes to ensure credit notes related to pre-year end sales are deducted from sales. That's your purpose. Second one, a high-profile advertising campaign may last for more than one accounting period. The cost incurred for advertising campaign may partially be treated as repayment and not fully expensed off. The operating expenses increased by 87.5% compared to last year. This is an indication that they charge all the expenses in 1 year. Maybe the campaign lasts for more than 1 year. So a prepayment could have been understated. Now, what is the main thing that create the risk? Is the period for the advertisement campaign, right? If the advertisement campaign really happens in 1 year, then you have no issue on the expenses. That's why your response you need to check the duration for the campaign. Review the agreement for the advertising campaign to understand the duration of the campaign. Okay. Understand the duration. Is it 1 year or 2 years or 3 years? Okay. Then you do the calculation. Apportion the advertising expense, okay, based on the campaign period. Of course, you can write in your own words, no problem. Just want the meaning over there. You apportion the expenses based on the campaign period. Okay. Request management to recognize the prepayment for all advanced advertising expense. Those that they pay in advance, put under prepayment. Ask management to do it. That is your response. How you react. Okay. We don't explain like change the financial statements to recognize prepayment. No, because you cannot change the accounts. You are audited. You are not the manager. Okay, you are not the management. Right. So class, let's take a break. Okay. Come back around 8:10 to continue with the rest. Then we move on to chapter 12. Yeah. Any question you can leave it in the chat box. Okay. All right. Oh, sorry for the day. Okay, I get a question over here says that if we can use whether we can use delivery notes instead of the word dispatch notes. Actually, they are the same. You can also use delivery notes. It's just that normally in the exam answer, examiner prefer to use the words dispatch notes. That is why I follow the words dispatch notes. So if you are using delivery notes, nothing is wrong. It's okay. Yeah. Okay. Next, WaterScore has extended the credit period to customers, increase the risk of irrecoverable debt, and the risk is that receivable may be overstated if the irrecoverable debts not yet been written off. I think I missed out one word here, right? Irrecoverable debt. Sorry. Irrecoverable debt may not yet be written off. So we are now auditing the valuation for the receivable. Okay. Uncredited lodgement as uncredited check. So can, no problem. Shouldn't be penalized on the words that we choose to use. So if can, yeah, we use the examiner words. I'm saying, even though you use the word uncredited check, you still can get the marks. No worry. But if can, we try to follow the the wordings that they use in the exam. Okay. So this part is irrecoverable debts. Yeah, you're welcome. Okay. Regarding the valuation, you can always review the post-year-end collection. But as an auditor response, we use the word extent. Review the extent of the post-year-end collections from the receivable to ensure the receivable balances are recoverable. Of course, when you review the post-year-end collection, may not be all the receivables are collected after year-end. So if any receivables are not collected after year-end, okay, discuss with the management whether there is a need for allowance for receivables. So you can see that the answer are more or less the same. It's just that we use some wordings like extend the review, do more, select more samples. Okay. Next is finance director has included additional overheads for inventory valuation. The additional overheads may not be relevant to production. So it is the effort of finance director to show better performance by showing higher inventory value. So they go and include some overheads which are not production related, maybe, okay? So if these additional overheads are not production related, then inventory balance and profits both are overstated. Our concern is the overhead amount, whether they are production related. So this is how we are going to respond to it. You have the inventory balance. Look at this year inventory, the breakdown. You get a breakdown for the cost. You get material cost, labor cost, overhead cost. And the overheads also you can get a breakdown. What are inside the overheads? You compare to last year, then you can find out which overheads are the additional one compared to last year. And then you look into the additional overheads, study their nature. Are they production related? That's the way we do it. Okay. So first of all, I must check what are the overheads that has been in addition for the year. First of all, obtain a breakdown of the inventory cost as at year end. Compared to the prior year inventory cost in details to identify the additional overheads being included during the year. So once you get the additional overheads, we will evaluate the overheads and determine whether they are production related. Okay. Find out what are the additional overheads and determine whether they are production related. So if they are actually production related, then it's okay. yeah, let him include them in the inventory balance. Okay. The operating expenses were increased by 87.5% compared to last year. Gross profit margin increased from 44.4% to 52.2%. Operating profit margin reduced from 22.2% to 19.6%. So the ratios are telling you got a higher gross profit margin but lower operating profit margin. So it indicates that you have an understatement of cost of sales. Okay, your cost of sales is too less because of what? Because of incorrect classification. Some cost of sales wrongly included in operating expenses. That's why operating expenses increased so much, but cost of sales reduced. Okay, how do we respond to this? Is you get the breakdown. Operating expenses is one, cost of sales the breakdown. Compare with last year. Okay, let's say operating expenses. Last year I got entertainment expenses. This year I also have it. Last year got advertising cost. This year also have it. So you compare on a line by line basis. Okay, first of all we obtain a breakdown of the cost of sales and operating expenses. Compare to the prior year cost of sales and operating expenses. Okay, using this word on a line by line basis. That means you compare column by column. Like that, you can actually find out, last time production overheads are inside cost of sales, but now inside operating expenses. Then you can see they got a wrong classification. Okay, compared to the prior year, on a line by line basis, discuss with management any incorrect classifications between cost of sales and operating expenses. Request management to reclassify the expenses. Next. Payable days increased from 43.8 days to 53.1 days. If some payable balances are being over-recognized because we have been taking up more purchases, then payable balances could be overstated. Okay, how am I going to respond to this? Because I already mentioned the risk is that maybe taking up more purchases because of I over-recognize the purchases, maybe I record next year purchases. So my procedure is still cut off. Okay, the answer will be more or less the same with the first one. Extend the cut-off test. Extend the cut-off test on purchases by review the pre and post year-end dispatch notes from suppliers. Trace them to the invoices and payable balances to confirm. Payable balances. Okay, correct. To confirm proper cut-off. To confirm they record in the correct accounting periods. Waterscore is currently relying on the overdraft to meet operating expenditure. The current ratio remains healthy, but it is always a risk to rely on the overdraft in order to meet operating expenses. What if the bank withdraw the overdraft facility? Then they will have no money to meet operating expenses. Then going concern will be a problem. In the accounting standards, we need to make a disclosure about the uncertainty over going concern. Now the risk is they didn't make a disclosure following IAS 1. So your response is the key thing is about whether the overdraft facility is still there or not. This is the key thing. If the overdraft is still there, then definitely they are going concern. So I will review the post year end renewal of the overdraft facility. Maybe after year end they have successfully renewed it, then going concern wouldn't be an issue. Discuss with management what actions to be taken if no renewal, and because of the disclosure, I must review the notes to financial statements for the disclosure on going concern, ensure they are adequately disclosed with the uncertainty. Okay, we have one more question to go with this sunflower code. Sunflower. Okay. Yeah, after this we go through chapter 12. Okay. Completed already, right? Okay. Okay. Next question. Sunflower spent 1.6 million for refurbishment. Possibly that the refurbishment costs are related to repair costs. Therefore, they are revenue in nature, revenue expenditure. What if they have wrongly capitalized them? Then the profits will be overstated, PPE will be overstated. So the risk is about assistance, overstatement. Okay, they got some PPE which are not active. So your auditor response is you have to obtain a breakdown of all the capitalized costs. Okay. Breakdown of the capitalized cost for additions during the year. Scrutinize the capital expenditure to confirm no revenue expenditure being capitalized. Okay, so you'll find that my auditor response is more or less the same with the substantive procedures. But you have to write the relevant procedures for the correct assertions. Request management to expense of the revenue expenditure. That's all. Next, there was a gain on disposal from disposal of a smaller warehouse. The gain on disposal is calculated by taking sales proceed less carrying amount. If the carrying amount of the warehouses are not correctly being deducted, of course the gain will be overstated. Okay, so the risk is I'm afraid the carrying amount are not correct. So what are we going to do is we first confirm all the disposal are taken up by looking into the board minutes. Okay, you must make sure all disposal are taken into account. So from the board minutes, review board minutes to ascertain all disposal of warehouses, verify the disposal to the non-current asset register, because from the non-current asset register you can see the cost of the asset, accumulated depreciation for the assets, everything. So you verify to this non-current asset register, you will expect to see that they are being removed. Okay, they are being removed from the non-current asset register with the correct carrying amount. So verify the disposal to the non-current asset register, confirm they are okay. Remove or derecognize. Okay, you can choose which one that you prefer. They are derecognized. Agree the carrying amount to the calculation on gain on disposal. And agree the sale proceed to the bank statement. So you see all the procedures here are actually telling step by step what to do in order to verify the accuracy for the gain or loss on disposal. Lastly, you recalculate the gain on disposal to confirm accuracy. Okay, that's how we respond to it. Step by step, how we are going to check and reduce the risk, reduce the audit risk. A warehouse was disposed during the year. If the disposed warehouse is not being derecognized from the property, plant and equipment, then the property, plant and equipment could be overstated. Okay. So again, I'm going to confirm. Actually, these steps can be used for the next answer since I break it down into two audit risks. So yeah, this part you can use it. Okay, this part you can use it. This is how we respond. Verify the disposal to the non-currency register to confirm they are derecognized. So copy from here and paste here. The refurbishment was financed by a by a bank loan repayable over 5 years period. It is required to split the loan liability into current and non-current liability. If the split are not correct, then the current liability will be overstated. Okay. How do I know how much to be divided? It depends on the loan agreement. Okay. So I must obtain the loan agreement, review the terms of the loan to understand the terms in the loan agreement. Management is the one who calculate for the split. Okay, for the split of this non-current liability. Therefore, management will have a working paper. You will expect management have an Excel file, to calculate how much are current liability, how much are non-current liabilities. So you get this working paper, okay, review the working paper from management, and determine whether the terms such as interest rate and duration for repayment are correctly incorporated into the calculation for the split of liability into current and non-current. Okay. So the terms are correctly taking into account for the calculation. Of course, you can have other answers, such as you say re-perform the calculation compared to the management one, discuss with management, see got difference or not. Also can. You can try to do on your own and ask management why got different. Okay. Inventory count was conducted on 31st December for all 25 supermarkets. Audit team members got lack of audit personnel to observe the stock count. Therefore, higher detection risk, okay, because no one go and see the stock count. The response, okay, for this one is more straightforward. You don't have to write substantive procedure because this one has nothing to do with the items in the financial statements. The general understanding is that you engage more people. Since you got not enough team members, you may engage more audit personnel to observe the stock count during the day. Okay. relocate more manpower resources from other audit team members. Okay, ask some help from other departments to observe the stock count. Okay, maybe audit firm really got no staff. If not possible, okay, auditor can make use of the work of internal auditor. Okay, I will explain more about this later. Just put out the answer first. Auditor may use the work of internal auditor for the observation of stock count, review any deficiencies identified during the count from the internal auditors. Okay. Now, this is under ISA 610. In the later chapter, I will cover with you for this use of the work of internal auditor. Yes, external auditor can use the work of internal auditor since some of the parts that they are doing are the same one. External auditor also inspect the stock count, internal auditor also the same. Therefore, external auditor may use their work. Okay. So we will cover more about this later. Yeah. Next, the inventory was valued based on retail method, taking selling price less estimated profit margin. Acceptable method for inventory valuation. However, finance director uses a lower margin than actual, then inventory value would be overstated. Yes, lower margin means you less out less profits, then your cost will be higher. When your cost is higher, inventory balance will be overstated, profit will be the same. So in order to test this one, okay, you just select samples of the goods, look at their actual margin, trace to the purchase invoice, find the actual margin, then you compare to the inventory listing. Inventory listing based on estimate one, like 20%, 30%. So you look at the actual margin, is it more or less the same? If not the same, then you discuss with finance director, ask him why not the same. So select samples of inventories, trace them to the purchase invoices to ascertain the actual margin. Okay, to ascertain the actual margin. Compare the actual margin to the estimated margin used by finance director. Okay, discuss with the finance director any significant difference. Lower margin. Mm, mm, mm. Oh, closing stock. Closing stock value. Mm. If production cost overstated, then profit will be understated. Ah, production cost and inventory costs are two different things. It's two different things. Okay. Uh, wait. Okay. Yeah, yeah, yeah. Correct. Okay. Yes. Cost of sales also have both sides. It's okay. It's okay. Let me revise a bit on this part. Because the structure itself a bit confusing. Okay. Opening inventory. Okay. Then production cost or purchases. Then we have less closing inventory. Okay. Afterwards, I'm getting a gross profit. Okay. So let's say my sales is 100, opening stock nothing lah. Okay, make it easier. No opening stock. My production cost is 80. Okay, let's say I spend $80 for material, labor, whatever cost incurred during the period. This one won't change one. Okay, the problem is how much I will accumulate them as my closing stock value. So imagine, okay, my closing stock value based on my calculation, some overheads I include, some I don't include, okay, whatever, come out with $20. So this cost of sales will be 60, therefore gross profit is 40. Let's say I overstate this figure. Some overheads are, are not so much related to this stock, but I purposely put it in. I make it 30. So what happened to my cost of sales? Become 50. Then my profit will become 50. That's why overstatement on the closing stock will overstate the gross profits. If I understate the closing stock, my gross profit will be understated. So this figure will also appear in the statement of financial position. Under current assets, okay, you will see closing inventory. So I put here 20. Closing stock in the profit or loss 20. Current assets will be 20. So if this one I change to 30, current assets will also be overstated. So anyway, we still have to revise for this one. Later chapter 12 we will look into this. Yeah, inventory not easy to audit one. So now back to the question just now. They mentioned here, actually I am the one who mentioned that. Okay. um Taking a lower margin than actual. Okay, this finance director, he used a very special technique, so-called retail method. Okay, this retail method is like this. Okay, how I get the closing stock value? I don't want to calculate their cost. Okay, very lazy, not to say lazy lah, but too many stock. If you are running a retail business, you can do this. Your selling price is 100. Your actual cost maybe is 80. Okay, actual cost is 80 for one unit of the product, but different item got different costs. So we don't calculate one by one. I just estimate. I less out my profit. The balance will be my cost. Okay, I just less out my profit. So finance director say I estimate 20% as my profit margin. So our risk is that this percentage come from finance director one. Finance director simply say, hey, understate this profit margin, if he understate this profit margin, that means your cost is going to be 80%, right? Okay, so your cost will be higher, isn't it? When profit is lower, cost will be higher. Therefore, if the finance director uses a lower margin than actual one, stock value will be overstated. So now what we are going to do is, we go and test the margin. I don't want his estimate. I just select some samples, look at the purchase invoice to find the actual cost, then I will know the actual margin. Compare the actual margin to the estimated one, then I ask him, okay, got different. Let him explain. If he can't explain, then ask him to change the estimate, which is very tough. Yeah. Finance director, you know, usually they are accountant. Accountant versus accountant. Auditor also accountant. Like that. That's why you need audit committee. Remember in chapter 1, audit committee is to assist the communication between external auditor and finance director. That's why you need a middle person. This audit committee also an accountant. So that we avoid the argument. Hey, opening balances were transferred to the head office after centralization. The closing balances are wrongly transferred, then opening balances may be misstated. Okay. So to confirm the balances are correctly transferred, your step is to get all the closing balances, agree to the opening balances, that's all. Yeah. Obtain a list of closing balances prior to the transfer to the head office. Sorry. Agree the closing balances to the opening balances in head office. To confirm balances are correctly transferred. Okay. The next one, high workload for the finance department will increase the chance for human error. So it gives rise to high inherent risk, okay, because of human mistake. Yeah, lack of experience, human mistake, things are complex, all these give rise to inherent risk. So I'm not saying any specific items in the financial statements that could be misstated. So that's why I cannot use cut off assistance, all this, no. The response is very standardized for this. Auditor is required to maintain, okay, a higher degree of professional skepticism. Have we come across with this word? Okay. What is professional skepticism? Skepticism means you become more skeptical. Like a detective. Wow, this paper like this, yellowish one, sure a very old paper. Skeptical. Okay. The figures are not correct. Last year 100, this year 120, got different. Then you are thinking why got different one, very skeptical. Okay, but this is professional skepticism. Professional one. how how to maintain professional skepticism? Okay, you audit the financial statements, you already know their finance department got higher workload. So throughout the audit, right, throughout the audit, you become more alert to some conditions that may give rise to a material misstatement. Okay, auditor are more alert to conditions which may be giving rise to potential misstatements. Okay, this is the answer. Very standardized. Every time to do with inherent risk, you can write this answer. Very standardized. Okay, this professional skepticism not easy to maintain. You need training one. Okay, so I will say that generally, audit junior will have less professional skepticism, where audit senior will have more professional skepticism, because this skepticism come from your experience also. The more experience that you get, then the clearer the picture you can see through the audit. Mm, okay. So in other words, it's something like pay more attention for the audit. Finally, it comes to the last point. Financial controller left Sunflower, and the new financial controller may not be experienced to review financial statements. So this is about control risk. Again, not specifically on one item, it's about general control risk. Remember in chapter 8, nature, timing, and extent of test of control. When you expect the control risk is higher, you have to do more tests, right? Okay, more risk, more tests until a level you expect the control risk is too high already. Then you don't have to do control test. Okay, now extend the sample size for test of control, because you think that the control risk high, so you do more for the control test. For systems of internal control of Sunflower, okay, if the controls are not effective, okay, not effective, then how? Auditor uses substantive approach. That means increase the substantive testing. Yeah, because the overall concept is when your control is reliable, okay, then you rely on that control and reduce substantive testing. Now that control cannot, then you have to test more for substantive procedures. Okay. Our objective today to complete the auditor response. Okay. Be honest, this part is tough. Yeah, this part is hard. It's tough, no doubt. In order to get 1 mark from here, first of all, your audit risk must be correct. Okay. If audit risk is not correct, then it's very hard to score mark in the auditor response. So both of them are actually linked together. Now, how to study on this part? Seems like you need to have audit experience, right? To know what to respond. Actually, no, you don't need to. Okay. The answer looks very technical indeed. This is what exactly auditor would do. But good news for you is the past year questions, yeah, they are repeating the answer. So you just need to know one set of the question. Like like today, it is the first time you answer for auditor response, you might feel very tough. Just like you learn for a driving lesson. You know, when you drive, you have to see the front, you have to check the back, you have to drive the styling, you have to, make sure the gear are on, brake, everything. So many things, then it's enough. The next thing to do is you need practice. Once you practice, first time you drive, sure, very difficult. But after a while, then you realize every time you will do the same thing. Okay, then you will get used to it. Yeah, when you want to turn left, you will look at the left automatically. So when you look at opening balances transfer to head office, agree the closing balance, opening balances. So through practice, we can remember those answers, yeah, and try to use your own words to explain it as well. Okay, so we will spend more time to practice audit risk questions if you are free. You can try the specimen exam for Mila Kolako. Okay, that's audit risk questions. Yeah. So chapter 12, okay, we will cover on this area. Audit of inventory is always high risk unless your inventory balance is immaterial. But unfortunately, most of the time, inventory are material. Okay. So just now we mentioned, yeah, like in this example, you can see clearly closing stock will affect your profit one. That's why manipulation, yeah, if management want to show greater profits, management want to show a good result, they might use inventory balance because it's very simple. You see, I push up the inventory value, my profits goes higher. Next year, this figure become opening stock. When this become opening stock, it release clear up in the next year financial profit or loss. Correct or not? See, closing stock become higher, next year become opening stock, it will charge out as an expense. If you manipulation of accounts using sales, sales not so easy. You want to credit sales, then the remaining parts go to receivable. Next year you charge out receivable, you become bad debts. Then auditor will ask you why got bad debts. A bit difficult. But stock, wow, very nice to use to overstate profit. At the same time, also increase the asset. Therefore, this is a high risk area. Raw material may be difficult to count. Like certain materials such as gold, jewelry, got different value. Okay. Work in progress also very complex. You need to get the percentage of completion. Percentage of completion come from estimate. Very judgmental. Okay. Like one of the audit clients that I'm having with the firm, they are doing bakery shop. So bakery shop they sell cakes. So all these cakes they don't build one by one. They don't make one by one. It's like one big piece, right? And then they cut it. So by the time when I audit them across the year end, they got work in progress. They put inside the fridge. For those cakes, they have it, but not yet cut out and put the layer. So how do we account for this work in progress? The material very cheap only, isn't it? Flour only. Okay. But cakes can sell for high value. One cakes maybe up to 100 ringgit also. Yeah, 80 ringgit, 100 ringgit. So the work in progress, how do you account for it? What is the percentage of completion? Okay. But fortunately, for small companies, inventory balance is still immaterial. Yeah. If material, then it will be difficult. Like a factory produce chemical one, yeah, percentage of completion. How? Very difficult. Calculation also involve estimate. Auditor officer stock count also very difficult when the stock are located in different locations. So big audit firms like Big Four, probably they have more resources. They can travel around, or they can ask if you accept a company, they have a subsidiary overseas. Are you going to travel to overseas and observe the stock count? Okay, very unlikely. Yeah, but larger audit firms can do that with the international network of firms. They call up, oh, help me to do the stock count. They can. Anyway, it's also one of the risks. Stocks are susceptible to misappropriation. People may steal the stock. And once people have steal the stock, of course, people will keep quiet. They won't tell you, isn't it? Yeah, management steal stock. Like warehouse manager took away the goods, sell it in the black market. Will he go and tell the CEO I stolen the goods? No, he won't tell, and he will hide it. He will hide it. So no one will know. That's why stock will be overstated. Example, greed salad oil swindle fraud. This happened many years ago. They have this salad oil, okay, worth a lot of money, of course. So this company wanted to borrow loan. So they asked the banker to come and see the tank. Inside the tank, they got a lot of salad oil, and using this to create a charge to borrow the bank loan. So the more stock that they have, the more loans that they can borrow. So what they did was they go and put water inside the tank, and water having greater density than the oil. So that's why the oil will flood on the surface. Okay, beneath the oil, all of them are water. So the banker come and observe, well, open up the tank, look at it from the top, all of them are the stellar oil. So the banker, okay, go and verify the tank one by one. Okay, because the area was very big. Yeah, the time they need time to do the stock count. So during lunchtime, there was one employee in this company alert the banker and say, please do something to steal the tank. You will see what is under the oil. Wow, then the banker alert. After lunch, he go and try to steal the oil. And then he found out, oh, inside there got a lot of water. And then they start checking all the stock again because of the whistleblower. Then they identify the fraud. So the loan borrowed from the bank previously also based on the same technique. Yeah, luckily they have prevented more disaster to happen. Otherwise, the bank will go bankrupt. Okay, these are all cheating. So cheat from the stock. Another case is Kingston Cotton Mill. Okay, that one is over value of the stock. Then they use the extra profits to declare the dividend. So shareholders take back the dividend by fake profits. Yeah. Stock account does not form part of the double entry. No double entry one, you see. If you increase it to $30, your closing inventory becomes $30. So your double entry is debit closing stock, credit closing stock, just at different location. So next year it become opening inventory, no double entry. People will use this account for overstatement for the stock, and sometimes also hard to determine the inventory quality. Yeah, like last time I audit this company selling machinery parts one. They show me the parts. I also don't know it's functional or not. Okay? I also don't know what part is that. I'm auditor, I'm not an engineer, so I don't know. Okay, how am I going to test? I don't even have the machine. I don't know it used for what machines. So I just guess based on the outlook, I think it's a good quality one. Okay, then I just account for it. So all these are difficulty. That's why in the audit we have to stay alert. Okay, IS2 requirement. This one we talk about it in the next class. Okay, today we focus on inventory count. Inventory got two parts. One is inventory quantity. How many units we have multiply with inventory value to get closing inventory balance. So we have not enough time to complete everything, but we can at least cover the first one, inventory quantity. So auditor need to audit inventory quantity by having inventory count. This is the requirement of ISA 501. Audit evidence. Audit evidence is ISA 500. So 501 is more specific to certain items such as inventory. The standard says when your inventory balance is material to the financial statements, is big amount for the material, for the inventory, for the inventory is material balance, you have to attend the stock count. Okay, you have to attend the stock count by getting the evidence on existence and conditions of inventory. Oh, how long you? Okay, 5 minutes there. Inventory quantity. Okay. Stock count instruction. This stock count instruction is written by management. Okay. This part will be tested, okay, in the internal control deficiency question. Remember in chapter 9, I say that inventory part, yeah, we skip it first. This is now we are going to look into the control system about inventory. Okay, management is the one who conduct the stock count. They have to go into their warehouse, calculate how many units they have, record down the correct quantity, then report the closing stock value. So auditor over here, auditor doesn't involve in the stock count. Auditor just visit and make sure they follow proper instruction. That's why auditor will ask the management, hey, come up with your instruction. You must have an instruction to follow, then only you can confirm your stock count are effective. Otherwise, people don't know how to do the stock count, end up the stock count are very messy. The quantities are not correct. Then what's the purpose you do the stock count? So that's why this instruction is written by the management. Auditor must read them to see whether they are appropriate or not. So these instructions, auditor will expect to see the following things. First, there must be 2 count staff to perform the count in a team. One to perform the count and one to record the count. So auditor will ask the management how your staff will count the stock. So the management reply the auditor and say, oh, we have a team. One team, one person, yeah. Send in all the staff, go into the warehouse and perform the count. Auditor will immediately say no, because this is the weakness. You cannot have one person to do the count. How can one person to do the count? Sure got problem one. What problem is that? If you ask me to perform the count, in the warehouse you got ladder, go up and down to do the count. If one person to go and do it, climb up to the ladder, open up the box, wow, inside the box, unit D150 got 10 units. Another stock got 15 units. Okay, so by the time when I climb down from the ladder, pick up the paper, I already forget what is up there. That one is 15 or 10. Never mind lah, one person only what, no one will know one. I don't even go up and count, I just simply write out the quantity, no one will know. That's the problem. That's why we need two staff. You must know the objective of doing this. Okay, the objective of doing this is to reduce human error. So one to count and one to record is very good. So the one who climb up to the ladder, perform the count, then he will shout to his team member, stop, D150 got 10 units. Then he will record. So this will be a better way. Number two. Okay. The two count staff, one is from warehouse department and another one is from an independent department, such as purchase or account department. Doesn't matter so long as they are not both of them from warehouse. Okay, aim to promote segregation of duty. Okay, avoid missing inventories, remain undetected, because warehouse staff may hide the fact that goods are stolen. So if let's say examiner put down in the scenario mentioned the count team consists of two staff from the warehouse, there is a problem. The one who can steal goods in the warehouse is the warehouse staff lah. Make sense? Okay, so if both of them are from warehouse department, let's say they have took away the goods. By the time when they perform the count, they will look at each other. This one, I know, we have stolen the goods, so put inside the quantity as per book quantity. But if you have one from warehouse, one from another department, then it's easier for you to alert with the stolen goods. The accounting staff, let's say, a junior accounting staff, usually he will be the one who record the count, okay, account staff. Take a piece of paper, a pen, then it is a warehouse staff go and perform the count, climb up to the ladder. Then the account staff will ask one, why that box you don't want to calculate? Why the other one you don't do? So missing goods will be easier to detect. Okay, number three. Mark the goods after they are counted. Okay, mark the counted goods. The reason is very simple. Avoid double count. Okay, avoid double count. This is to improve the efficiency. Avoid inventory being counted for twice, so reduce the chance to overstate the inventory balance. This is the logic, yeah. After you have performed the count, you put a sticker, put a mark. Okay. We never want incidents like during the stock count, the team members go and start perform the count very happy. After half an hour, then the other staff come over here. Hey, why you count here? I already counted. Wow. So boring, right? So we don't want this to happen. That's why the one who manage the stock count is very important. He need this instruction. Number 4, all count sheets are sequentially pre-numbered. Because any missing count sheets are easily detected. Okay. So if they are not being sequentially numbered, if the count sheets went missing, also they won't realize. So it will understate the inventory quantity. Number 5, the count sheet must include blank space to record the inventories The count sheet must include blank space to record inventories not stated in the count sheets but physically exist. So let's say in one A4 paper, okay, in the count sheets you have the book quantity, you have the goods with the description. You don't print for the full page. You print for half page only. So only half page, the other half page are empty one. When the count staff go and perform the count, they saw some inventory. This one, what item is this? Look into the count sheets, they don't have it. And then they will record somewhere in the blank space. The reason why of doing this is we don't want them to add additional count sheets. Yeah. Avoid adding additional count sheets. This is to prevent warehouse staff to overstate inventory quantity by include additional count sheets. With this reason, definitely is pre-arranged one for the inventory count. So let's say auditor mentioned, oh, next week we are going to come for the inventory count. Then the CEO asks the warehouse manager, hey, warehouse manager, I want to show higher profit this year. You know what to do lah. So the warehouse manager, okay, go back, spend one whole week to prepare the fake count sheet. To prepare the fake one, he get ready, okay, with all signature already. So he puts inside his bag. By the time when he collect back all the count sheets, he just add on his one to the official count sheet. Then they pass to the auditor. Okay, that will overstate the inventory quantity. We don't want that. So auditor, when we observe the stock count, we will ask the client how many pages of the count sheets that you have. Let's say 200 pages. Then that's it. 200 pages, you send out to the team, come back also 200 pages. Cannot be more. If more means you add on something behind, which is not right. So in each page, have to put some blank space. So you avoid additional pages. And number 6, all count staff must put their names in the on the count sheet and sign on it. Okay, the reason is to ensure count staff are accountable to their work. and management can clarify any issues with the house staff. You ask this warehouse staff to perform the count. Okay. You know, some warehouse staff really don't know how to write numbers one. 7 write like 4, 9 write like 6. Don't know how to write numbers one. And in the warehouse, you perform the stock count, you have to climb the ladder, go into the cabinet, sweating, okay, so hot inside there. Use the hand to write on the paper. The paper will be like, a lot of sweat, wet, with the ink written on the account sheet. The ink may be faded away slowly. So sometimes very hard to see one. Indeed. Yeah. Sometimes they climb up and down. The papers are even tear off half of them. A lot of patterns one. If you are involved in audit, then you will know how difficult is the stock count for the warehouses. Okay. Another part is use pen to record quantity, not to use pencil. Any changes required must counter sign on the changes. Counter sign is like you put a very small signature beside the changes that you have made. And the reason to use pen is to avoid making unauthorized changes. So we are afraid the warehouse staff, after they took back the account sheets, then they just add 10 become 100. Then they can overstate the stock quantity. Okay, of course, that will be unauthorized changes. Yeah, we want to avoid that. So any changes must be countersigned. Number 8. Do not include the inventory book quantity inside the account sheet. Leave it blank and for account staff to fill in. What is the objective? Okay. Avoid account staff relying on the quantity and not performing the count. In this will avoid incorrect physical quantity being recorded. Okay. Yeah. So leave it blank. Okay. Examiner also tested all this. Okay. All these points. Whenever they come out the inventory system. Okay. These are the deficiency if you include the book quantity. Yeah. Sometimes people are like that one. Okay. I give you the count sheet. Inside stated item A got 5 units, item B got 8 units. Maybe at the beginning, you also tell yourself, I am very honest one. I really go and perform the count. Check the quantity whether correct or not. Imagine you start the stock count during weekend, morning 8 o'clock, you start to perform the stock count. You just had your breakfast. Very motivated. Wow, I will verify everything. Then climb up to the ladder, go down until after lunch, and then you work until evening. All the body are wet because of the sweat, very hot, very tired, very hungry. Then you realize you only stock take for 40% only. Then during that time, would you want to rely on the stock quantity on the count sheets? The answer is yes. Okay, so that's why we don't write. Yeah, cannot write. Next, count staff are specified on the areas to perform the count. So that this is to ensure all areas are counted and avoid some areas being counted for twice. Okay. So they are assigned with the specific areas. Okay. A responsible person to collect all the count sheets after the stock out. Okay. Collect all the count sheets after the stock out. Confirm the completeness and signature. Then forward to accounts department for reconciliation. No delay one. Okay. After the count, they should have to do this. Yeah, the objective is very clear. We don't want anybody make changes to the count sheet. Okay. So another person, not the warehouse staff, to collect all the count sheets, send back to the accounts department as soon as possible. Don't delay for overnight. Exam scenario, they put in this way. Put in overnight. The warehouse manager midnight can come in and add something over there. Okay. A lot of drama one. So avoid all this. Send to accounts department first. Okay. Then your question is, what if the CEO from the beginning already tell accounts department to manipulate the quantity? Like that, you don't accept the client. The client lack of integrity. Okay. So these are the control that we need for the inventory count. Your responsibility is divided into 3 parts. Okay, for stock count, you got 3 parts: before, during, and after. Okay, before, during, and after. Before the stock count, yeah, sorry, let you finish first. Okay, before the stock count, we do planning. So plan for the stock count Auditor will review last year's stock take working papers to determine any potential problems or not. You have done the previous year's stock count, you sure know some problems, right? And don't repeat the same mistake. Okay? Don't repeat the same mistake. Yeah. And also look for the materiality for the specific item. Some items may be very material. Then you must perform the count for that. Discuss with the client plan, visit the locations, and determine which locations you want to conduct the stock count. Consider visiting the warehouses without letting client knows which one you are intend to visit. Element of unpredictability. Now this one we don't do in reality one. Unless you really don't trust your client. Your client shows indication of no integrity. In that case, of course, you won't accept the client at the first place. Right? But once you have accepted the client and you cannot resign, then you got no choice to do the audit, then you do this. This one, your client sure very angry with you. And which warehouse you want to visit, you don't want to tell. Early in the morning, you appear in front of the office. Your client will be very angry. Later, they don't pay you the fee. Yeah. So we don't do this. Okay. Consider the need of using expert. Okay. This is I-star 620. Using expert means some stock you don't know how to do valuation. For example, like jewelry, gold, oil reserve, yeah, all these specialized industry. Okay, prepare personal assignment. Who should observe the count and review the count instruction? That is why we have run through the stock count instruction just now. You review it, and they are not right. You have to tell management when, hey, change the instruction. Yeah. So you tell management what to change until the count instruction looks like this. Okay, looks like this. Exactly like what you want. Then on the day, during the stock count, this is the second phrase. During the stock count, you ensure all store locations are covered. And then slow moving one, they are segregated. Those belonging to third parties one also segregated. That means you separate them from the normal goods. Now, why damaged goods have to be separated? Because they got problem on valuation. Impairment for the inventory. You have to write off the inventory when you can't sell them. Okay, for example, last time I audit the furniture store. Furniture store definitely got some furnitures are obsolete, damaged, and then they put aside for clearance sales. Very cheap price, clearance sales. So when I perform the stock count, okay, follow auditing standard. Follow auditing standards. I have to perform the stock count for the damaged inventory and go and determine what is the net realizable value. Okay, but in real life, now off the record, in real life, how do we do the audit? If you see the furniture for damaged one is not a lot, for me, I won't perform the count. I won't go and waste my time to do the stock count because eventually after I perform the stock count, I calculate the net realizable value, it's still immaterial. You don't see the warehouse, half of them are clearance sales, right? With all the damaged goods like that, your client also no money to pay you audit fee later. So better, follow the theory. Okay, yes, it's good that they have segregated, so I don't count them as the normal goods, so that I avoid overstatement of goods. Number two, some people they do renovation, they haven't take away the furniture. So those goods they already bought, but they leave it in the furniture store. Their inventory belongs to the party, segregated, and you don't include them in the inventory because they are sold. Okay, so inventories are no longer included. Number three, make sure all the count sheets at the end of the day are signed by the person who carry out the count. And during the stock count, you observe the stock count based on the instruction. This is your main job on that day. You are the auditor, you go there and you make sure they follow exactly the instruction. Yeah. If they don't follow instruction, then what for you want to review all this, right? Yeah. So make sure they follow the instruction. If they don't follow, means they got control deficiency. And extra work, go and do something on these two, completeness and assistance tab. Okay. You select some stock randomly. Select stock and trace to count sheets. This is to ensure completeness. You can do audit procedures for this part. Okay. Go and select some stock, trace to the count sheets. Oh, they have recorded, means they are complete. Assistant, the other way around. You want to know the stock is actually there or not from count sheets, trace to goods. This will be an assistant step. So during the stock count, you are there. You can do these two. Perform cut-off test. Cut-off test means the goods are moving in one, you must exclude them. Okay. Of course, the best is you don't have the goods moving in and out during the stock count. So please write here, advise the management to conduct stock count during off-peak where no inventory movement. Okay. No inventory movement, then we perform the stock count. Yeah. So stock cut-off test, no need to explain. Yeah, it's the same thing. Obtain pre and post year-end dispatch notes from the customer and payables. Ensure proper cut-off for the stock. Stock coming in and stock going out must be recorded in the correct accounting period. Okay. So no stock movement. That's why a lot of companies prefer December year-end. December year-end, next day morning, 1st of January is holiday. Holiday got no inventory movement. Then they ask all the staff to come back and perform stock count. Very happy one. 3 times the wages. 31st December night time, your friend ask you to go party. Countdown, countdown. Then you say, I don't want to do countdown. Tomorrow early morning, I have to go office to do stock count. What a boring job, right? Okay. Never mind. 3 times salary. After the stock take, okay. Sorry, come back to this impression. This impression is a bit more technical. You don't put in exam, so never mind. Okay. This is like you look at the stock. Wow. Small office have all the stock. Then the client tell you, my stock here worth 1 million ringgit. Wow. Cheating, right? You use your impression. Okay. See whether you trust them or not. After the stock count, okay, make sure all documentations are there. Adjusted for the book records. Sure got different one. Ask them to adjust. If those inventory are under control of a third party, auditor will get direct confirmation from the third party. This is like your stock is not under your own custody. It's not with you. You get a third party to hold your stock. So auditor cannot do stock count because the stock are with the third party. For example, in local markets, all right, let's say in Malaysia you have Lazada, Shopee. Many sellers they put their goods inside the warehouse one. So the moment when you place an order, they can directly ship out from the warehouse. So today you order, tomorrow you receive the goods. Very fast. It's because they directly send out from the warehouse. Okay. So in that case, auditor send confirmation to confirm quantities and condition of the inventory. We will cover more about this in the final parts, okay, for our syllabus. ISA 402, the use of service organization. Okay, other audit procedures, you can read through on your own, okay. So the more important one is the stock count instruction. Yeah, then you got cut off procedures, like what I have mentioned. You do the creditor cut off and debtors cut off. Okay, the wordings are the same. Pre and post dispatch notes will refer to the stock quantity. Yeah. So I leave it for your own reading, and that's it. Yeah, that's it for today. Okay. So we continue with valuation next part. How we value them. Audit the cost. Cost can be standard cost method or retail method. That's why a lot of things to do one for inventory. All right, class. Any questions so far? Okay. If no question, then we can end our sessions here. Thank you. Have a good night. If you have questions, you may leave it here. I will answer accordingly.